Hello guys, it's Robbie here, and here I am with a breakdown about today's GU because I was able to find one entry opportunity which was fitted to my plan, and there was another possible entry opportunity, but I was missing a criteria, so it was a no-go zone for me. But I will break it down everything in this recap. Uh, I'm gonna talk only about GU. Euro USD wasn't really interesting today, so most of the things happened on GU, and it was more entertaining session on GU. So that's the reason I break down GU only today. So here we are on the 4-hour time frame. What happened on the 4-hour time frame? Well, since yesterday, where I posted 2 recaps, yeah, nothing much happened technically. There was a 4-hour demand mitigation, which has caused a 4-hour swing breakout structure before. As you can see, with really nice volume push to the upside, caused the break of the swing high point with a clear body closure, and price has just reacted on it. But before that, beforehand, price broke below this demand right here, which was the last recent valuable 4-hour demand that has caused the breakout structure here after the swing breakout structure. And as you can see, this demand has broken from this supply zone. But price reacted on the lower 4-hour demand area that has caused the swing breakout structure. And after that, price reversed back to the upside and reacted on this 4-hour demand. This 4-hour demand wasn't strong enough to create a bigger pullback, a bigger continuation to the downside to some lower demand areas. But price has just reacted on a 15-minute valuable demand at this point. At this low point, there was a 15-minute flip zone. And after that, price has made a breakout structure to the upside, but technically this was an only internal breakout structure. This is the high, this is the low. And as you can see, price just broken above substructural high point. So this is why we can call this one as an internal breakout structure. So price was actually doing a bullish structure, and I was expecting longs in this session. So after this breakout structure, we had substructure. Technically, we can call it right here. This is the high, this is the low point, and everything between this high and low point is just substructure because this is the structure. This was the substructure, and yeah, it's a bit funny right now, but the point is, Forer was technically making a bullish structure, even though it wasn't that strong and inefficient. But what can we see? What can we identify here? We can identify really nice equal high on the upside, which can be a perfect liquidity to target for the longs, for possible swing target, and actually we can identify liquidity right here, because technically this whole movement right here is a liquidity building movement. There is liquidity on the upside, there is liquidity on the downside. So this is a huge liquidity pool currently, but inside of that huge liquidity pool, price was making bullish structure. So yeah, let's go down to the 15-minute time frame, and actually that's all on the 4-hour time frame. I was expecting bullish continuations on the 15-minute time frame. And let's take a look on the 15-minute time frame. On the 15-minute time frame, there was an extreme demand mitigation. On Monday, or actually on Tuesday, I was expecting a deeper mitigation on this zone, and after this deeper mitigation, continuation to the upside. It did not happen, as you can see. Price didn't make a deeper mitigation, but without a deeper mitigation, price left behind liquidity right here, and this liquidity did not have been swept. Price has made a breakout structure, and this was actually the internal breakout structure on the 4-hour time frame. Perfect. This 15-minute demand has caused a flip previously, so this is why this demand valuable for us caused really nice volume candles right here, as you can see. And even though the 50% haven't been mitigated, we could expect a deeper mitigation. And actually, as you can see, it happened perfectly yesterday before New York session. So there was a literally perfect 50% mitigation on this zone, and price has just skyrocketed to the upside, but reacted on this supply area, which has reversed the price to the downside once again. But we were expecting actually a break of this zone rather than a reversal, because it was just part of the liquidity. There was liquidity, but with this full zone mitigation, technically price had just printed more liquidity on the upside with a perfect equal high or with a trendline liquidity right here. So this high point right here was technically more, the only point of this full zone mitigation was to print more liquidity on the upside before grabbing orders from the downside, and after that a continuation to the upside. So yeah, but after that supply zone mitigation, after reversal has started, price reacted on the previous extreme zone, which was the origin of this bullish movement to the upside. That has caused change of character on several places, and after that price has reacted on it, but couldn't really manage to break above this supply area. This supply area wasn't that valuable one. It has caused the mitigation of this zone, but it has also made a really nice volume candle right here, as you can see, and technically caused a break of structure here to the downside. So it wasn't that valuable, and it was also part of the liquidity, but price has flipped it. So before the session, because session started here with the next candle, and I will break this session with a bar replay. So there was a flip of this zone, which has happened from this wick demand right here. This is a 50-minute wick demand because this wick has started the inefficient push to the upside that has caused the body break, and that has caused the break of this 50-minute supply. And the reason why I marked this demand out, why I marked the wick out, because it is greater than the previous candle. And here is the inefficiency that has been made by this candle right here. So there was the inefficient gap in this case. So yeah, this is why I marked this demand out. Perfect. There was another demand on the downside right here, but this demand was actually part of this huge liquidity pool on the downside. I can't draw a single line, but here was liquidity on the downside. So I was expecting a confirmation entry here or a confirmation entry here, but this would have less probability, and I would rather see, and I would rather wait for a flip of this extreme demand in this case. And if a flip happened here on this lower demand area, then I would execute short, and I would probably wait for short opportunities. But this was my main plan actually. So I was pretty sure actually I was pretty sure about the confirmation entry on this 50-minute demand, 50-minute wick demand, because at this point we couldn't really find any valuable supply at all. There was only one wick that I marked out later when price mitigated it during the session. So in the markups, I did not mark any supply out at this region, and I was just expecting a sweep of this liquidity. So yeah, this supply was actually directly part of this huge liquidity pool on the upside, and technically that's the reason I did not mark this supply out. So confirmation entry here, or on the extreme zone, or the flip of the extreme zone. These were my plans for these zones down here, or a new breakout structure, confirmation entry on the newly formed demand area, and expecting the sweep of this liquidity. These were my plans for this session on GU, and actually the 5-minute time frame was exactly the same as the 15-minute time frame. We could refine this higher zone into this 5-minute candle that has caused the flip perfectly on this 15-minute supply, but I stick to the 15-minute zone. I did not refine it, and actually we can play price forward, and these I have already explained that what were my plans for this session. And yeah, let's play price forward, and let's count the criteria, because at the beginning of the session there was the first entry opportunity. So there was a full zone mitigation, as you can see, on this 15-minute wick demand. So session started with this candle right here. A huge candles has been printed right after the session open, and with the full zone mitigation, price has just swept really nice amount of liquidity here. However, there was one more thing. after this full zone mitigation, price has just printed literally perfect double bottom just below, just at the bottom of the 15-minute demand area. So I was expecting a sweep of this liquidity, which actually happened right here with these candles, as you can see. And let me show you how the 15-minute candle closed. So these were the candles that has caused the sweep of this liquidity right here. On the 5-minute time frame, there was a body break. There is no doubt about it. However, this was a 15-minute candle. So even though if you refined this zone, this 15-minute zone into this 5-minute zone, we could treat and we should treat this zone, this lower zone, as a 15-minute zone because it was a refinement of a 15-minute candle, 15-minute zone. So on the 15-minute time frame, you can see that 15-minute candle closed inside of this 15-minute weak demand area. So it was just a literally perfect sweep of this double bottom liquidity on the 1-minute time frame and even on the 5-minute time frame. Yeah, but it was much clearer on the 1-minute time frame. So 15-minute candle closed inside of this 15-minute zone. So after this sweep, I marked this change of character line right here. This was the last recent supply that has caused the breakout structure here on the downside. And here was the supply that has caused the breakout structure. And if a wick above this line happened, then I would look for longs and I would expect the sweep of this huge liquidity on the upside. So let's see how does the change of character happened. There is a really nice volume push, as you can see. So I did count this as a V-shaped recovery. So after the sweep of this liquidity, which has happened with this candle, this is the last candle. So 15-minute candle closed with this candle right here. After that, price skyrocketed to the upside, printed really nice volume candles, and the change of character happened with the wick. On the 1-minute time frame, wick breaks are enough for change of characters, and this wick break was enough for me in order to consider this possible entry POI on the downside, which has caused the change of character right here. So I did mark this 1-minute zone out right here, and I started to count my criteria after the change of character, because a change of character or a flip is inevitable for us in order to look for entry opportunities. So there was higher time frame zone mitigation. Price has mitigated the valuable 15-minute weak demand area. There was liquidity to take for the higher time frame zone. There was liquidity just above the zone, but price also swept some liquidity below at the bottom of the 15-minute demand area. So there was two possible liquidity to take areas that we could consider as liquidity to take. Perfect. There is inefficiency for the entry POI. Here is the inefficient gap that has been made by this entry, possible entry opportunity, possible entry zone that has caused the change of character. We are in a pro trend. Yes, we are in a pro trend. And if we take a look on the 4-hour time frame, even though this is the high, this is the low point. So this is the high, this is the low point. Inside of this substructure, price has made bullish structure. So we could expect the continuation of this slow structure, technically slow movement, and we could expect the break of this supply area. On the 15-minute time frame, we also could identify that price has returned back to this extreme zone, which has caused the flip of this supply area. And after the 50% mitigation, price has changed character on several places on the 15-minute time frame. Here was the first one that has caused the breakout structure here, as you can see. So price has just returned back to the extreme once again. And after this extreme zone mitigation, price has swept some liquidity from this region. This liquidity has been swept by this week. And price has just flipped the last recent supply and returned back to the last recent demand area. So we are clearly in a pro trend. It wasn't, it could have been clearer, but that was given for us. So we have to work with it. So we are in a pro trend. There is no doubt about it. Perfect. We have all the 4 base criteria that we need. So I could count and we could count the variable ones. The first one was the change of character. Change of character happened, as you can see, after the 50-minute weak demand mitigation. It was a V-shaped recovery too. Price was hesitating inside of this zone a bit, but after that price printed volume candles, and I am really looking for these volume candles before the change of character. And if you take a look on the 5-minute time frame, this was a V-shaped recovery too. Or maybe we could take a look on the 3-minute time frame. It was a V-shaped recovery too, as you can see. So yeah, it was a really nice V-shaped recovery in this case, and I did count the V-shaped recovery. The seventh one was the 50% mitigation. Price mitigated more than 50% of the higher time frame zone. So there is 50% mitigation, and there wasn't any supply area at all. This was the last recent high point, last recent low point. There isn't any supply area on the chart, on the price action. So price wasn't coming from any opposite sided zone. And we had liquidity target on the upside. Technically, the whole upside right here was liquidity target. So I had 9 criteria for this setup. Combined liquidation was missing, and I did not count the corrective pullbacks from pro movements. If you take a look on the 15-minute time frame, it's not that clear. Actually, it's really not that clear which movements are stronger than the others. So yeah, I did not count that because it wasn't that clear in this case, but I still had 9 criteria, and I went for this zone, and I had a limit order on this zone. Let me show you my entry opportunity. I believe it was on the 50%. Yeah, it was on the 50% because I wanted to cover the low right here. And I had an equilibrium entry with 9 criterias, and I was targeting a simple 10 risk reward ratio first because I didn't really measure my final TP. So I have just set and I have just typed my entry price into MetaTrader and my stop loss level into the MetaTrader. And I would love to, I would like to measure my TP a bit after I place my entry and stop loss into the MetaTrader. So yeah, but at first I was targeting simple 10 risk reward ratio, which perfectly lined up with this 15-minute weak supply area. However, I was really expecting the sweep of this liquidity. So the upside of this liquidity, the top of this liquidity would have been a perfect liquidity target for 12.6 risk reward ratio. And yeah, but the point is I had 9 criteria for this entry POI, and as you can see, price couldn't really manage to mitigate my entry POI and actually just skyrocketed the upside and mitigated the 15-minute weak supply area. At this point, price was coming from an opposite sided zone, and it almost hit my target level for 10 risk reward ratio, and the price action has really gone far away from my entry POI. So I decided to delete my order here, and also higher time frame breakout structure happened here, as you can see, even on the 5-minute time frame. And I have marked this 5-minute demand out where I was waiting for another confirmation entry, and I was really expecting the sweep of this liquidity because technically this high point was another touch for this trendline liquidity right here. So yeah, unfortunately it was a no-tech trade. However, the plan played out perfectly technically. But it was a no-tech trade. It happens, and yeah, it was perfectly fine. So after that, after this no-tech, I marked this 5-minute demand out that has caused the breakout structure. The reason why I marked this 5-minute demand out instead of the lower one, because the volume that has caused the breakout structure, the real volume candle, has came into the market from this candle and not from this candle. So just measure this inefficiency right here, this inefficient gap, and this inefficient gap that has been printed on the market. So yeah, that's the reason why I marked this 5-minute demand out and not the lower candle. So yeah, after the breakout structure, after the mitigation of the supply, I decided to mark this 5-minute demand out, where I was waiting for another confirmation entry. So this was my plan, a confirmation entry here, or maybe a flip of the supply. If it happens, then I was 100% sure that the liquidity right here will be swept and we will see a new breakout structure. This was another plan. Or if price would flip this zone, then I was sure about that we will see deeper price action regions, because there was insane amount of liquidity on the downside too right here. So these were my plans after this breakout structure and after 30 minutes into the session. And let's play price forward and let's see what happens, because actually after the mitigation of this 5-minute demand, there was another possible entry opportunity. There was a mitigation, and I wanted to see the fail of this high point. Actually, in this case, this was a really slow, full of efficient movement to the downside after this 50-minute wick supply mitigation, and there was the last recent breakout structure. So technically the change of character happened here, but I really wanted to see the fail of this zone, because it was also a flip zone. If we take a look here, there was a reaction, and this reaction wasn't strong enough to create continuation to the upside. Price has just flipped this 1-minute demand from this 1-minute supply. So yeah, that's why I wanted to see the change of character here. But this is just a full of efficient movement. It wasn't that clear to identify the change of character, but change of character happened, as you can see, on several places. So price has broken above several high points on the 1-minute time frame, and we can see that actually a flip was there too. Price reacted on this supply, which wasn't a really valuable supply in this case. So technically this whole movement was just full of efficient candles, but there was a possible entry opportunity on this zone right here. And no, sorry, there was, because this zone caused the change of character, and this zone could function as liquidity for the lower zone. But in this case, I wanted to see real liquidity creation for the lower zone, for the character changing demand area right here. This was the character changing demand. Perfect. Here is the demand. And the point is, I wanted to see liquidity here was sorry. I wanted to see liquidity here for this possible entry POI, because there wasn't clear liquidity for the higher time frame zone, and 50% was missing in this case. And also, I still couldn't really identify the corrective pullback strong pro movements criteria. So in this case, I have 3 missing criteria. The first one was the combined liquidation. The second one was the 50% mitigation. And the third one was the corrective pullback strong pro movements. So I had 3 missing criteria, which wasn't really enough for me. And let me play price forward. So liquidity creation happened for the entry POI. As you can see, there was a literally perfect double bottoms. But after that, I had 8 criteria for this setup. I was missing the 50% mitigation on the higher time frame zone. I was missing the combined liquidation, so there wasn't really liquidity creation for the higher time frame zone. And in this case, there was liquidity only for the entry POI. And also I was missing the corrective pullback strong pro movements criteria. So I had 8 criteria for this entry POI, which is not enough for me. In order to set a limit order on an entry POI, I need at least 9 criteria, as it happened before on this zone. There was 9 criteria, there was 8 criteria. It's not enough, so it was a no-go zone for me. And actually it would have been a stop loss hit because there was some low impact news that has caused some really unexpected movement. And after that, nothing interesting happened during the whole session. Price has printed perfect double bottoms for the supply below, and there was perfect liquidity on the upside too. And yeah, around 11 a.m., so 1 hour before session close, I left the session somewhere around here, and we can identify that technically this whole movement after the mitigation of this 5-minute demand was substructural movement. So here where the session closed, this was, yeah, this was here, this was the last candle of the session. And actually, as you can see, this was only substructural movement right after this full zone mitigation, this 5-minute demand and liquidity creation. So there was nothing, just liquidity on the chart. And technically that's all about this session. I had a no tag on this entry POI. Price couldn't really manage to tag me in, and it almost hit my TP level. And after that, here was a no-go zone for me because I did not have enough criteria for that zone. And technically, that's all, guys. I really hope you can grab some value from this recap, and see you guys tomorrow in London session. New York won't be tradable because we have NFP tomorrow. So yeah, that's all, guys. Take care and have a nice rest of the day. Bye.